Monday morning, folks, and welcome to a brand new episode of the Film at Mondays podcast. Joining me today is Ronan Manly. Ronan, a very warm welcome to you again. Like you said last week, we seem to be breaking new barriers in gold almost every other week. We did so even last week, where gold broke above 3,300 levels. US China tensions definitely are at the center of it all. But I want to understand what are the other developments that are happening in the background that could have also contributed to this $100 increase in gold last week.
Again, on Thursday, there was the new all-time high above 3,300, which broke really rapidly and continued on up until like 3,340. I think that was triggered specifically by the Trump administration saying that they're going to use more type of sanctions against countries that they say are cooperating with China in terms of tariffs. And that could be up to 70 different countries. So that I think took about 2 days to filter through the media. It was exclusively revealed by the Wall Street Journal on Tuesday, but it filtered into the markets by Thursday. And I think that really drove the price higher because of increased uncertainty again. As regards China, China seems to have been driving a lot of demand this week. Like, for example, Deutsche Bank came out with a note saying that Chinese institutions have been rotating out of US treasuries and into gold and Japanese treasuries and high quality European bonds.
Let's quickly look at the technical outlook for the coming weeks, see where the supports and resistances are, and kind of take an understanding of what we can expect from the markets this week. These are the last four candlestick charts from last week's trading action right over here. We saw this $100 move on 16th April, which allowed gold to break above 3,300, shatter that level, and cumulatively reach around 3360, 3370 levels. That was the high that we reached as of last week. So one of the reasons why gold has been able to break above 3,300 is largely due to the simultaneous drop in the US dollar. This is the dollar index on the daily chart, and you see that this is the movement of dollar index over the last 1 week. We've seen dollar index break outside of this parallel trend line blue channel that you see here. We're going to wait and watch and see whether there's more pullback or more correction outside of this level, or does dollar index manage to enter into this channel back again and majorly kind of consolidate around this zone over here. So that's something that we're going to look out for in the coming week. Now, looking forward, taking a Fibonacci retracement from this point to this point right here, we kind of understand where the levels are. The interesting part is where the 161.8% Fibonacci retracement shows up. It shows up exactly at the 3380 resistance where gold has taken a pause as of last week. If we had to draw how the movement of gold was, we can kind of characterize it by this ABCD pattern right here, where you had this A movement to B to C and all the way up till this D point right here. We've reached our D point of this ABCD leg, and that D point coincides with 3380. That's where gold has taken a little bit of a correction and take a little bit of a breather. I expect as a result of this, we might see a little bit of pullback where the markets might actually correct back to 3,300 or even 3,250 levels on the down low. One of the other reasons I say that is if you look at these two indicators right here, the MACD and the average true range, the MACD is at record highs, even if you look at it from a historical perspective, right? I think you had comparable levels here, but you're reaching MACD of 80 levels. What this basically means is gold is heavily overbought as of the current range. And you also see in the average true range indicator that the value is currently around 63. Average true range basically means what is the average price range on a daily level in US spot gold. And that value is currently around $63, which means on a daily basis, gold is making an average daily move about $63, which is extremely volatile, extremely high. So what we can deduce from both of these is gold's bull run is overstretched. There's a lot of extension given there's a safe haven demand and given there's a lot of uncertainty in the markets. But if the tensions ease into the coming week, we are going to see some pullback up to this level, which I mentioned, which is around 3250 right here. Well, thanks, Ronan. That was a complete roundup of the price action. Let's see how the markets shape out this week. But till then, thank you so much and goodbye.